This week we're going to take a look at a couple exercises in Chapter 15. The first exercise is going to be 15-4. In this exercise we can see that we've got our company Shire looking ahead to the next year and trying to calculate a predetermined overhead rate. And they're going to be basing this on the labor rate. Now, when a company is looking at the cost of goods to make the product, you're going to have three different types of costs that are going to go into that. You're going to have direct materials cost, and if you think about perhaps baking a pizza, the direct materials cost might be the dough and the pepperoni and other ingredients you might put on top, like the cheese. You're also going to have labor that's going to go into it, so you've got the cost of actually putting those direct materials together. You've got maybe the cost of loading the pizza into the oven itself. And then the third group is going to be overhead and indirect costs. And here it might be the utilities cost of running the oven to bake the pizza. Now the direct materials cost, is going to be the amount that is actually in the pizza itself. The labor cost is going to be the amount traceable to that individual product as well. Overhead, in contrast, is something that might vary from product to product, and we may not know exactly in real time how much each product is going to use up. So what we may do is forecast how much of an amount is going to be used, and then use a cost driver for that purpose. So here we're going to use labor, and then we're going to calculate how much utilities or how much overhead is going to be used based on that labor rate. So in order to do that, we're not going to know ahead of time, so we're going to have to create the estimate, and the estimate we may use is based on the prior year's data. So here we've got the information that we're going to use for those. We're going to either use our prior year data to calculate these estimates, or we may forecast those estimates. The estimate we have for the total overhead cost in the following year, in 2015, is going to be $747,500, and then the cost for our labor that we're estimating for 2015 is going to be $575,000. So what we're being asked first to do is calculate what that predetermined overhead rate is going to be, and we're going to calculate that by dividing those estimated overhead costs by the estimated direct labor cost. Again, both these numbers that we're calculating here are going to be the estimated numbers, and we're calculating those on the front end. So we're just going to divide the 747,500 by the 575 to get 130% of labor costs is what we anticipate is the amount of those utilities used up. So in the pizza example, we'd anticipate $1.30 of electricity or utilities for running the oven for every dollar that we spend on labor to load a pizza into the oven. The next thing we're going to do is apply that to an actual cost when we're calculating the total cost for a job. In this case, it would be in 2015. So for direct materials, again, we're going to add up the actual direct materials traceable to that job. Direct labor, similarly, we're going to calculate by adding up the direct labor traceable to that job. And then the overhead, we're going to take that total labor used on this job, the 3,200, as an actual amount, and multiply it by the 130% to get the amount of overhead costs we're going to apply to that job. So for the total cost, we'd have $15,350 for direct materials, $3,200 for direct labor, and then the overhead would be the $4,160. So we'd get total cost for the job by adding those three numbers together. Exercise 15-8, we're going to look at some accounting information that we have here for this company, and what we're going to be asked to do is prepare the journal entries for each of those events. Raw materials being purchased for cash, direct materials usage, and the indirect materials usage. So we want all three journal entries. The first thing we're going to do is look back to create our T account for raw materials, which is going to help us out, and we can see at the top left of our table here we have $43,000 for raw materials that we start with on that we ended April 30th with. So we imagine that we start May 1st with that same amount. And then we can see in activities and information for May, the amount we've purchased is going to be $210,000 and paid with cash. So we're going to debit inventory specifically. We're going to debit raw materials inventory by the $210,000, and then we're going to credit cash by that same $210,000. And that's going to be our first journal entry. The second we're looking for is going to be the direct materials usage. We're going to have to use that T account to calculate that amount. So we're going to include the $210,000 for a purchase. That's going to debit our raw materials. And then you can see a little lower in that same table we have $15,000 as indirect materials that were used. So that would be a credit. And then what we're going to want to do is look at how much we ended May with. And we ended May with $52,000. So this is, if you think back to using the T accounts in financial accounting, this is going to be a missing data problem for how much is going to be credited for the direct materials usage. So we would add 43,000, 210,000 together, subtract 15,000, and then the direct materials subtracted from that amount should give us 52,000. And that's going to be 186,000 for the total amount for direct materials. So in our journal entry, we're going to want to debit work in process inventory. So we've moved those raw materials from the raw materials bucket into to where they're starting to get assembled into the product. So that'll be 186,000 debited to work in process, and then we're going to credit it out of the raw materials inventory. And then for indirect materials usage, we were kind of given it to start our T account, but we've got 15,000 that was pulled out of indirect as indirect materials. So what we're going to do is we're going to debit that to overhead by the 15,000, and then we're going to credit it out of raw materials inventory as well. So I also want to look at an exercise in chapter 16 here, specifically exercise 16-6. And then we're going to have a company that is going to go through and complete a portion of their products that they're making each given period. And we're going to use the process inventory here as far as going through and doing the accounting of it. And we're going to take a look specifically at equivalent units. Is what we're going to be focusing on. So here we want to calculate the equivalent units of production for the department. For units of reconciliation, we're going to want to look at how many we begin work in process with, and that we're given that information in the paragraph above, that we've got 25,000 units that began at the beginning of the month. And then we also start 300,000 in some fashion. Now we may not have finished the 300,000 that we started, but we've at least got the ball rolling on those units. So the total amount of units that we potentially could finish, or at least have gotten in some sort, is going to be 325,000. So when we look at what happened to those 325,000, we look at how many units were completed and transferred out, and then 295,000 is what's listed here. That's actually going to be the amount that we calculate. We are giving in the problem 30,000 is going to be our ending work in process units, and that's going to be in the second paragraph. And we know that the total amount that we're tracking is 325,000, so we calculated the units completed and transferred out by subtracting 30,000 from the 325,000 to get us 295,000. So the equivalent units is the next thing we're going to look at here. So we've got 295,000 that were transferred out. Those, if they transferred out of our department, were 100% completed. So we're going to have 295,000 whether we're looking at them for a materials cost or whether we're looking at them for a conversion cost. Materials cost being, going back to the pizza example, the pepperoni, the cheese, the dough. Conversion cost is going to be our overhead and or our labor. So the amount it takes to turn a direct material into a finished product is going to be the conversion cost. So looking at those 30,000, in the second paragraph you can see we've got 80% of complete for materials. And what that might be is maybe we got 80% of the pepperoni on it, maybe we got 80% of the cheese on it, maybe we got 80% of the dough currently into the pizza, so we don't have all the materials in our pizza yet. And then what it would be, using maybe a simpler number, is if we had 50% of one product completed and we had 50% of another product completed, we'd have two halves. So when we're using this equivalent units of production, we can either say we have two halves, or we can treat it as if we have one unit that's been completed from a cost standpoint. So what we want to do is take that 80% and say, well, how many, if we had to think about them as completed units or equivalent units, how many units is 80% worth? So we just multiply 80% times the 30,000, and we get 24,000 is going to be the equivalence of the unit. So if we had to put all our energy towards, if we start a unit, we complete a unit, and worked at the same rate, we'd have 24,000 completed. However, we've got 30,000 that are all about 80% complete on average. Now, from a conversion standpoint, we have the same sentence in that second paragraph. 30% is going to be the percentage we're looking at here. So we've got 30% of our labor and utilities that have been applied. So maybe we've assembled the pizzas for the most part, but we haven't actually put them in the oven yet. We've just done the prep time. So we've got 30% for the conversion. So we're going to take that 30% times 30,000. And when we're talking about conversion cost, we're going to treat it as if we've only got 9,000 units. So we're going to want to add both of those numbers up. Again, these are just for assigning those costs and are not the number of units that were accounted for. The number we have accounted for is still going to be that 325,000. But when we're talking about direct materials cost, we're going to use 318,000. And when we're talking about conversion cost here in this period, we're going to use 304,000. So the next thing we want to do is figure out how to calculate that cost per equivalent unit. So if we look at the top, we've got our 60,100 is what we began with, work in process. 44,800 of that is being told in the problem that that's direct materials. 15,300 is going to be conversion cost. And then we've got the amount that we used during the period. So we've got the 1,231,200 for direct materials and 896,700 for conversion cost. So we want to go ahead and start tabling those out. So again, those first two numbers that we see listed here are going to add together to be the 60,100. And then we're going to list the direct materials number and then the conversion number. And we're going to add our total direct materials cost here and our total conversion cost for the amount in the period. Either the amount that started because of the inventory or that we added during this period. And now we're going to divide by the equivalent units of production to see how much per equivalent unit that cost makes up. So from a direct material standpoint, we're going to use the 319,000. And from a conversion standpoint, we're going to use the 304,000. So dividing the 1,276,000 by 319,000, we'll get $4. And dividing the 912,000 by 304,000, we'll get $3. The third thing we're going to do here is to use the weighted average method to assign those costs. So we're going to look at the 295,000 for the equivalent units that were completed and transferred out. We're going to assign $4 for direct materials. And we're going to assign $3 to each of those for conversion. So the total cost from a direct materials and or a conversion standpoint is going to be $2,065,000, so we're just going to add the $1,180,000 to the $885,000. And then the cost of ending work in process. The direct materials, we have equivalent units of 24,000, so multiply that by the $4 to get 96,000. From a conversion standpoint, we had 9,000 for the equivalent units of production. Multiply that by the $3 to get 27,000. And our total cost of ending work in process is 123,000. So the total cost here is going to be 2,188,000. And we'll take a look at how that 2,188,000 breaks down. But we can see in that second table to where if we add the total cost from direct materials, the 1,276,000 to the 912,000, we're going to get that same 2,188,000. But let's take a little bit of a closer look at that. So we're going to have the 60,100. This made up of the 44,800 and the 15,300. And then we're going to have the total costs that were included in the period, the 1,231,200 plus the 896,700 to get us the 2,127,900. We add both of those together. Again, we're going to have 2,188,000. And then that number is going to tie back to the sum of both the 2,065,000 for the cost of the units transferred out, added to the cost of those in ending work in process. So both will equal the 2,188,000.